Benchmark indices continue to extend losses. Nifty trades in around 21,600, while Sensex trades near 71,800, down by about 500 points. Broader markets move in tandem. Prime Minister Narendra Modi inaugurates the new airport terminal building at Tiruchirappalli, lays foundation stone of several projects worth 20,000 crores in Tamil Nadu. Ease My Trip approves raising up to 1,000 crore rupees via a preferential issue. And HUL's large pack strategy in its bid to drive volume growth is paying off, with distribution indicating a 5 to 10% growth across segments in Q3. Hello and welcome. I am Agam Vakil and you're watching Large Trades, and in this show we talk about bulk deals, block deals and several volume buzzers. At the moment we are taking a quick look at the markets, and we have seen weakness which is sustained, but over the last 2.5, 3 odd hours we've seen the markets largely consolidate, and there's been a flattish movement as far as these markets are concerned. If you consider the Nifty, that's down by as much as 0.5%. The Sensex as well. Well, not too much to speak for out there. The Bank Nifty will be in focus, considering we are looking at a little more weakness there, down by around 0.9%. Remember that while the Bank Nifty is down around 0.9%, the Fin Nifty holds on to losses to the tune of just about 0.5%. The reason why I mentioned Fin Nifty at the moment is because it is the weekly options expiry. We're seeing a little bit of support around the 21,300 mark, and the question is whether or not traders will be able to keep steady above that particular mark. And do remember that that's also where we have substantial amount of open interest building up as well. That said, in terms of your broader markets too, we have some amount of weakness, but not as much as what we've seen when it comes to your benchmarks. So a tad outperformance, but still there is weakness, and both the small cap and the mid cap indices are currently trending lower, marginally though. And what's keeping these markets higher? Mostly a lot of names from the pharmaceutical space. So we do have the likes of Gland Pharma, Lupin, Alembic Pharma. All of them are up and about in trade, and a lot of gains seen there as well. Of course, from the large cap space as well, we're largely seeing strength from Sun Pharma and Bajaj Finance. Bajaj twins are essentially the reason why we have not seen as much correction in the Fin Nifty as much as what we have seen in the Bank Nifty. So those are some of the nuances that are playing out as far as the markets today are concerned in general at the moment. And we continue to keep an eye on how we are seeing traction with respect to the futures and options space as well, given that it is the Fin Nifty expiry. That said, we move on and quickly address what stocks we are talking about today. Among all the stocks which will be in focus, we will have Lupin, we will have of course, Alembic Pharma as well. We also have, HUL, which will be in focus, but not necessarily because of the large trade, but because we have updates out there as well. And in large trades, we are also talking about Lemon Tree, Make Money Organics, as well as VST Industries. So plenty to keep an eye on in today's day of trade in terms of some of your heavier volume buzzers. But I'm going to start off with Lupin, where the shares have surged after Nomura has gone ahead and upgraded the price target for the company. Remember that Lupin has already seen a little bit of an up move off late on the back of some positive developments with respect to the US FDA. But I'm going to get in my colleague Harsh to give us an idea on what Nomura has to tell us about Lupin and why the upgrade. Harsh.
Well, yes, absolutely, Agam. So 6.5% higher on Lupin on the back of that Nomura rating. What we're seeing, therefore, is Nomura continues to maintain a buy. Target price is $1,593 a share. This is a considerable increase versus the 1,290 rupee per share target price that Nomura earlier had. So clearly demonstrating positivity on Lupin is Nomura. What they're suggesting is, one, EBITDA margins are set to improve over the next 3 to 4 years. They're expecting operational efficiencies to start to kick in, new product pipeline also to start to kick in, and all of those would possibly aid EBITDA margins going forward, cost control as well as new launches. Second, what they're also suggesting is that the US pipeline could drive growth on the current base. So they're expecting top line expansion as well on the back of US-led growth. And they're also expecting better growth in India on field force expansion, especially in the chronic segment where their presence is set to increase. And therefore, what the expectation is that even domestically, Lupin will actually do quite well. They've actually increased their target price on the basis of an increased EPS estimate for FY24, 25 and 26. What they've done is they've increased their EPS estimates for FY24 by 8%. On that higher base, they've increased the EPS estimates for FY25 by 2% and FY26 by 14%. And on the back of that, they've increased their target price as well to 1,293 rupees a share.
All right. Well, Harsh, thank you so much for getting us those updates. And as we speak, around the mark of 1,400 rupees per share, Lupin moves from strength to strength. And it's actually covered up quite a bit of the losses that it has made over the last 6 years. It is trading currently at its highest levels since April of 2017. So that has been a significant up move coming through for Lupin. But I'm going to stay with the pharma pack, and we're going to talk about our first last trade today, and that's Alembic Pharma, which is also buzzing on volumes and advancing in trade today. Let's get in my colleague Anushi to give us an update on this one. Anushi.
Absolutely. So if you come to Alembic Pharma, we are seeing quite some strong volumes over there, with the volumes being up about 17 times its 30-day average, and the stock hitting an intraday high of about 6%. Now, if you look at the overall 6 months also, so the stock has seen about a 29 to 30% gain. But this increasing volumes for the day was on the back of the company receiving tentative and final US FDA approval for 8 of its products in the quarter ending of September. So with this, it includes 8 products. So now, along with this, the cumulative total is about 196 ANDA approvals from the US FDA, which includes about 170 final approvals and 26 tentative approvals. Now, if you look at Q2 of FY24, the company had received about 6 approvals and had launched about 6 new launches. But if in the H2 of FY24, the company expects to launch about 10 more products in the US. So that's all on Alembic Pharma for today.
Right, Anushi, thank you so much for getting us that update on Alembic Pharma as well. And it is the entire pharmaceutical sector which is buzzing, right? Because if we actually consider the pharma index and take a look at what names are in fact are up and about, you'll know that a majority of them will have gained in today's job trade. And as I was mentioning earlier as well, it's not just Lupin and Alembic Pharma. We have a whole host of gains in several other counters as well. So you do have something like a Glenmark Pharma, which is up around 3.8%. Spark, Cipla, Divi's Laboratories, Biocon, all of them advancing, save for something like a Natco Pharma or Ipca Laboratories, but they're losing out, less than 0.5%. So marginal losses for them, mostly substantial gains coming for the pharmaceutical sector. And we're going to have to wait and watch as to how things eventually do pan out for this particular, air pocket of the market. But from the pharmaceutical space, we move on to the FMCG sector. As the FMCG sector deals with slow growth, Hindustan Unilever's large pack strategy appears to be paying off. The distributor's commentary to NDTV Profit indicates a 5 to 10% growth across segments in Q3. My colleague Sesa Sen is joining us with more on this. Sesa, good afternoon.
Right. So for brands, the larger packs result in instant volumes as they increase the number of units purchased in one visit. These packs are generally for family consumption, as it gives consumers, and it gives consumers the benefit of paying less per gram. Now, for HUL, this strategy is not new, as it has been pushing for larger packs across the modern retail trade for quite some time now. However, given that the strategy is paying off, the company has launched this larger packs in the general trade in a bid to drive volume-led growth. Now, HUL distributors say that the company has supported this larger packs with almost similar promotions as they have offered in the modern trade. Now, aided by the launch of modern trade SKUs in the general trade, distributors, they did indicate a 5 to 10% growth across segments in Q3 against the lower growth seen in the last several quarters. The move is not just helping them garner more value-conscious shoppers. It is also seen as a part of the strategy to keep off competition by making buyers procrastinate trials with other brands in the current inflationary setting. However, that said, the volume growth is likely to remain muted in the third quarter of the current fiscal as rural demand remains elusive. Now, unless rural recovers, the FMCG sector is unlikely to see a material uptick in the volume growth.
Okay, Sessa, thank you so much for getting us those updates on Hindustan Unilever and the kind of implications and the kind of trends that it may actually, throw light on when it comes to the entire FMCG sector as well, which of course will continue to be in focus considering the consumption theme in India and how that may play out in an election year. And before we jump into a short break, listen into the managements of Bajaj Auto and Maruti on what they had to say on the December sales and the outlook ahead.
Generally speaking, the auto industry growth is very closely related to the GDP growth, the per capita GDP growth. And there the projection so far is about 6.5% or thereabouts. And that's very positive because there is a very high correlation between the auto industry growth. In fact, correlation, statistically speaking, the R square factor is about 0.983, which is a pretty high correlation. So anything which negatively affects the overall economic growth would affect the auto industry growth as well. Of course, auto loan rates, if they were to go up, will also adversely affect because 80% of the retails in the industry happens through the auto loans. And therefore, any interest rate hikes there would be negative for the industry. Also, the fuel prices can go either way. Because of the geopolitical situation, it's possible that you could see spikes upward for the fuel prices, or if everything happens okay, you could even see a lower demand if overall demand for energy comes down, depending on the economic growth in other countries.
Triumph has had a very good impact. We launched in end of July with one model, and then we have followed it up with introduction of the Scrambler in October. And both the offerings have been received extremely well. We are building an exclusive network for Triumph. So as of date, we've got about 55 stores over there. Last month, our retails were about 2,800 units or so. But, one has to look at the fact that these were perhaps in about 40 to 45 stores only, and because the rest of the stores came up in the second half of December. And in some places, the acceptance is such, like, Kerala, we are in Cochin and Trivandrum, which is a very important market for this class of motorcycles.
Welcome back. This is Large Trades, and we now put the spotlight on the hospitality industry. In this case, specifically Lemon Tree, which has also been up and about on largely a broken note that we have come across. This Motilal Oswal, who has in fact reiterated that buy rating on the stock. And it's not just the brokerage, we've actually seen a whole host of other analysts talk positively about the entire sector coming through. Now, the question really is that how does the quarter gone by, which was a festive one and also one with a relatively large number of holidays, has panned out for the sector? But let's stick with Lemon Tree. Let's get in my colleague Mahima to give us an update on not only the broking note, but also the volumes profile. Mahima.
Right, Agam. So as you rightly mentioned, Motilal Oswal has reiterated its buy rating with a target price of rupees 150. They're backing this on the back that Lemon Tree Hotels is improving its presence in the luxury segment, and it is increasing its inventory through management contracts. Also, the company is set to benefit from the significant tailwinds that are happening in the sector as a whole, and they're also seeing that the room renovations that are taking place will aid to the growth of ARR as a whole. Also, the company is expected to benefit in the key markets such as NCR and Mumbai because of the mega convention centers like Bharat Mandapam and Yashobhoomi in NCR and Geo Convention in Mumbai. This will help Lemon Tree get a lot of footfall. Also, its project of Aurika Sky City in Mumbai near the international airport is a premium segment hotel which is expected to contribute 21% to revenue and 23% to EBITDA by FY26. Also, they have a strong pipeline of 3,354 managed rooms which will be operational by FY27. There are some of the risks that they've also mentioned, one of them being decline in MICE activity, second is downtrend in tourism, and third one is lower than expected traction in Mumbai. If we talk about the stock performance of Lemon Tree Hotels, the stock has been trading very high in volumes today, and it has touched an intraday high of 12.64%. In the 5 days, the stock has been up 9.5%, and in the past 6 months, it has gained over 40%. Also, overall, the streets have given a outlook in terms of how the hotel industry will be in the coming year. They're saying that FY23 has been a healthy growth year, and stock prices and valuations broadly capture this optimism going forward as well. And we're seeing that the national elections will see a bit of moderation in business occupancies and ARR as well. And if there's a shift of IPL outside, this could be a major risk. However, analysts, if we see the analyst recommendations, analysts are still bullish on the stock. Out of 18 analysts, 16 say buy and only 2 say sell. So this is the overall view of Lemon Tree Hotels.
Absolutely. Mahima, thank you so much for giving us a very rounded and comprehensive view on Lemon Tree. And of course, a lot of insights coming in as far as Motilal Oswal's view is concerned as well on Lemon Tree. At the moment, with huge volumes, currently trading at life highs as we speak at 129 rupees per share, nearly about 130 rupees per share. A lot of strength for this one. We'll continue to keep an eye on this one. And then from there on, we move on to Make Money Organics, which is the other stock which is in focus on account of high volumes. Well, I'm going to get in my colleague Hemash to give us an update on this one. Hemash, good afternoon.
Good afternoon, Agam. So Make Money Organics, this agrochemical company, which has had quite an extended period of quiet trade, has now decided to rather jump on volumes. The volumes are on 25 times their 30-day averages. And this company, which essentially offers pigments and agrochemicals, in terms of fundamental performance, has booked losses for the first half of this fiscal. You are seeing losses coming in the first quarter and the second quarter, and margins have also taken a steep dip from 12% levels a year back to now currently at 2% levels. In terms of the sector as a whole, specialty chemicals was under pressure on account of Chinese dumping as well as inventory destocking that they're noting across their end markets, which is the same story has been playing for this company. Prices have declined across the industry that have put a lot of pressure in terms of their EBITDA margins. Crop protection, which comprises 71% of their Q2 revenues was hit by lower price realizations as well as high inventory levels across end markets. They have also had to lower their capacity utilization for the same, which has led to operational inefficiencies and added a cost burden as well. Pigments, which comprise of the remaining 29% of the overall revenue, have noted demand contraction coming in. China has also imposed anti-dumping, which has impacted offtake. So that's really what's at play with Make Money Organics today. No apparent news flow as such, but the stock is again buzzing today on high volumes.
Right. Right. Well, thanks so much for that, Hemansh, in getting us those updates. Well, you know, at the end of the day, we are talking about VST Industries at the moment, and that one is locked in a 20% upper circuit after we saw a handful of bulk deals coming through. In a short span in time, we saw a huge surge in VST Industries. Do remember that this is the other tobacco company, the other listed tobacco company in India, and we have seen the intraday volumes coming in at the highest since August 2020. So well over 3 years, and that's the highest that we've seen in terms of volumes. Moreover, the stock also trades at the highest in well over 3.5 years at the moment. So we certainly have seen a little bit of, a take-up with the kind of opportunity that has been lost over the past 3.5 years. You know, we must remember that VST Industries is one of those companies which has been heavily owned, not just by institutions, but also some very, very large high net worth individuals. One of them, of course, being R.K. Damani and the family. And in fact, their stake in itself is quite significant as far as the VST Industries is concerned. And the question really is that who has bought and sold, but that's something that we wouldn't know at the moment. Perhaps over the span of the next few days, we may eventually have an idea about who has bought, in fact, and sold into VST Industries. But for now, of course, we're seeing that strength. Just a word on the performance of VST Industries over the past few years. We really haven't seen revenues grow tremendously. And that perhaps could also be one of the big reasons why we haven't seen a significant appreciation in the value of its share price in the same period. And naturally and consequently, because of the fact that we haven't seen a lot of growth in its revenues, we haven't really seen too much in terms of its profitability either, in terms of its EPS growth either. The question really now remains as to whether or not have things changed for the positive when it comes to VST Industries, and is that the reason why we have seen that sharp up move of around 20%? That's something that will be answered, I reckon, over the course of the next few weeks and months. We'll continue to keep an eye on that one. And on that note, we wrap. But before we wrap the show, we have the management of Balrampur Chini on how the government is easing restrictions on ethanol and affecting the company while also opening other avenues for revenue. This is what he had to say. Listen in.
For the ethanol year 23-24, government has already put in a cap of maximum 17 lakh tons of sugar diversion to happen into ethanol through B-heavy as well as juice route. Now, if we go by this, then there is no further scope for any incremental diversion to happen in B route as well as juice route. So if we take this into consideration, I believe most of the companies have already rejigged their operating plan for the ongoing ethanol year 23-24. So Balrampur Chini has also rejigged its plan. Earlier, we tendered 10 crores of juice-based ethanol, which has now been revised to 3 crores. We got our allocation for B-heavy, which is around 11.5 crores. And C-heavy, we will be doing around 3.5 crores liter. Rest in the form of ENA as well as the grain-based ethanol. So this is the revised operating plan as far as our company is concerned. And with 17 lakh tons of sugar going maximum into ethanol, and if I can speak on the balance sheet of sugar for the country as a whole, then we started the year with 57 lakh tons of sugar. Expected production as per release given by ISMA is around 317 lakhs after taking into consideration 17 lakh tons of diversion. Consumption would be in the region of around 285, max could be 390. So there is enough inventory which the government has built up. 57 is expected to go up to a level of around 75 lakh tons of sugar. So there is no reason to believe that the increment in B-heavy route as well as juice-based ethanol prices will not happen. It will definitely be linked. It is linked with the FRP increase. So that revision is on the cards now.